What's up, y'all? I'm gonna be going over price action on Thursday on NASDAQ. So, to begin, high time frame draws on liquidity. Bro, what is this? So, alright, so first of all, I mark up this equilibrium. We have this order block, liquidity sweep, and then pre-market, we're in a downwards move, break structure. And so, pre-market, we're moving down. And so, honestly, I'm thinking market open, we're going to get a strong move down, sweep one of these lows, and then get a rejection up, or sorry, get a reversal back to the upside. I was hoping that we would, get into this, reach this equilibrium, which we eventually did. However, the potential trade that I'll go over would have been this one right here off of this blue candle. However, at the end of the day, now looking at price action on Thursday, it just really wasn't the best, and I don't regret not taking the trade. So, marked up this fair value gap on 4 hour, order block 4 hour, equilibrium 4 hour. And so we see this move down, and on the 5 minutes, market open, we do continue moving downwards in this very, very choppy price action. And then we end up sweeping this liquidity and then move upwards. We see this high right here close on this candle. We wait for the 5-minute retracement on this black candle. And then now at 10:35, we are waiting for a break of structure back to the upside. So at 10:35, after our retracement, we're waiting for break of structure to the upside. Our previous high is up here. We don't, or actually it's technically right here, but to play it safe, we'll call it here. We technically break structure off of this candle on the 1 minute. And even if I were to have seen this trade, I doubt I would have entered. I doubt it. So our stops would be below here, and then take profits. Probably would have been up here somewhere. Yeah. I probably would have just taken profit like right here. So horrible risk to reward. Definitely would not have entered even if I saw it. And then we end up actually pushing all the way up here, and then we get that strong move to the downside. We finally end up retracing on the higher time frame. Bro, why does it do this? So as we can see, my bias was correct. Overall, we do end up pushing into equilibrium, sweeping some sort of buy side liquidity here. We retrace into this huge imbalance here, filling more orders, and then we tap into this order block. We don't really go deep into it, but at least tap into it. And from here, there's just this huge imbalance right here. I don't know what happened here, but technically, after this slight retracement, boom, upwards. So that was my overall bias for Thursday. I honestly thought that, market open, we'd push to equilibrium, sweep this liquidity, retrace into this order block, technically we already retracing into this area I get, but there's just huge. I would have thought we would have gone further, which we did end up doing. And then obviously, same bias would have been 5 minute break of structure to the upside, 5 minute, or at least like a sweep. We see sweep, we see buying pressure out of it, and then we wait for a 5 minute retracement. So like 5 minutes, like a 5 minute black candle, or it could have been like a 10 minutes, 5 minutes. As long as we don't necessarily close below this, say we sweep, go up, get a 5 or 10 minute retracement, like down to like right here, and then we get a 1 minute break of structure to the upside. So I'll draw it out for you guys actually. So say we're like right here, and then we see some buying pressure out of it, and then we wait for the 5 minute retracements. And if we go down here, wait for the 1 minute break of structure to the upside, we're chilling. However, if we get that if we get the selling buying pressure out of it, and then we're waiting for a retracement, but we close below here, we completely disregard it now. So essentially, the bias would have been, what I basically just explained, right? You just wait for the buying pressure out of it, 5 minute retracement, 1 minute break of structure to the upside, enter, and then target previous highs. But obviously, I would not have entered. We're here at 4 p.m., 6 p.m. That's not during my trading hours. So I mean, that's basically it. Overall, the market did respect our confluences. But and honestly, like I said, I'm not disappointed with not trading on Thursday, simply because this is our price action. I mean, this is just horrible. If we scale it down to like the 5 or 15 minute, same story, right? At least you have this whole movement, this was our Thursday. This was our Thursday price action. A bunch of choppiness. It just really wasn't the smoothest thing ever, in my opinion. So, at the end of the day, like I said last video, Monday and Tuesday are two pretty good trading days. Thursday, whatever. But yeah, boys, that's basically it for Thursday.